Hello and welcome again at Stocks Advisor. Today we will talk about Okta Incorporated, traded at Nasdaq, ticker name Okta. Well, it's a company with a market capitalization of 30 billions, of course, and trading really at a very nice price. But before starting further analysis, what we immediately need to remember about this company, that its price improvement and price growth is, of course, incredible. From 2018, we see it did grow from 25 to incredible at the current level to 127 and being even higher, so almost 10 times, which is really nice performance. And speaking of the company, of course, but what is important, it's a long time there were no major correction here. It's a first moment. Secondly, now coming back to the current situation, we need to see that moving averages 20 and 50 and 200 were in the growth regime before, let's say, the mid of February, because they were like making 20, 50 and 200 aligned, and then on top was the price bouncing and using moving averages 20 and 50 as a support. Here you can see all the way from April to February, but April, of course, of previous year. But now what happened starting from actually February, we see these kind of volatilities, and we see that moving averages are playing around, dancing around actually each other. And what might be happening, we could have several patterns here. So first of all, what is important, we could have a current pattern as a repetition of the previous. I will just draw it with the box that you can actually better understand what I mean. So the pattern that was taking place immediately after February, when we had decline, little bit rebounds and recovery. It might be happening again because we see again decline, bouncing now, still moving average 20 works as a resist and support simultaneously here, but also we are on top of it and it is bending upwards, so it might be we will continue growing. So this would be our, let's say, primary expectation. But what also is might be happening, this resist line that is formed at the moment, and actually it is the moving average 20 that is forming it, it might be quite strong, and it actually might, let's make it thicker, it might be even that strong that we will bounce lower. And if this is going to happen, then of course the next level would be around 150, and it would mean that the major correction is about to start, because it's long time awaited in a sense that it was not seen yet, so we might be observing it, especially taking into account that we had already kind of double top here by February and also by end of April, where we can see that here this line actually might be also a very strong resist. So if this is indeed true, we have these two resist levels, then we are about to form a major correction and we need to be prepared. But also, as I said, we could just rebound a little bit and only then go for correction, or even grow further. Situation could be something that we saw previous year, July, October. So we need to be prepared for both if we would like to trade, but still we need to be very cautious here. Therefore, let's do a quick analysis how to buy and how to trade. Of course, hoping for immediate rebounds, we can already buy, let's make this one thinner, in the current levels, which would be for us here, also being a volatility levels of previous tops actually, and this would be between 220 and 229.65. So let's write it here as a call out. So 220 and 265. I will not be writing cents because the price levels are already quite high, so cents does not really matter here. So let's write it here. This is the primary level, and then we expect the rebounds at least to the level, let's say, of about of previous one, and actually at least the level to rebounds will be expected here being about 270. So this will allow you to make at least 10-15% profit, and that's what we put here as a profit note, because this stock, as I said, might be going for correction, so we need to be very cautious and careful if you still choose playing with this one. So this is profit taking note here. If I have a rebounds, take it, don't hesitate. If we go lower, of course we need to be prepared for that as well, and then the second technical pattern therefore would be a bit lower, because we need to be preparing to go those levels, and actually it will be right here. Yes, it's indeed quite low, but that's actually the next technical pattern where we can still have some rebounds and then back be attracted towards this red line, which will work as a resist and attractor in both, being resist when price is near it and attractor when price is lower. We saw it already 2 times by mid of May and actually beginning of June. So this would be there for the second level, quite low though, 171 and 183. So let's write them here down. It will be with the call out 171 and about 183. So this is the second technical level where we still expect the rebounds to take place. And then what we need to take into account the possibility of negative catalyst effect, which could be very dramatic here, especially given the fact that we were growing that high through the years. And if there's any major coming regarding the business news, it could be quite severe. So the very principal level to average down in that case, it's not that it's coming, but we just need to be prepared. It will be here, the price action formed by April of previous year. And this will be between 113 and 126. It's not that we expect the price to go there, but it's the level where we would like to keep some funds to buy through if this doomsday scenario is taking place. And then while others will be exiting with losses, you will be just buying more and still able to make 10 to 15% profit, because as I said, this company, although growing really well, but may go for really correction. So we need to be careful because the pattern, the general trend is still undefined here. So we can play on quite quick indicator. If you are a midterm trader, I would wait a little bit, at least a couple of weeks, in order to understand where it is heading actually. But with this being said, these are the ways to play. We still can do it, and the way to trade here would be a little bit more cautious. So it's not 5 portion, but 6 portion play, meaning that the money you like to play, you can split in 6 portions. Then you can buy with 1 portion through the first channel. If it's cancelled, we're going to the second level, then you can buy with 2 portions there. And if there is any negative catalyst or any bad news coming, price drops to the third level, you can buy with remaining 3 portions there. This way, all the time, your current price will be quite close to your appropriate level. This way, once the rebound takes place, you will be able to make all the profit possible here, and it will be the best risk mitigation and actually optimization for profit versus loss. So if you like this way of trading, where we do not talk about stop loss, where we're not looking at 15-minute candles, so you don't need to stick at your PC all the time. We're just looking at daily candles and major principal levels. So if you like this way of trading, don't forget to subscribe to our channel, press the bell button. This way you will not miss our new videos and more interesting discussions for another US-based stocks. With this being said, good luck with Okta and see you at another episode of Stocks Advisor channel.